For more now, let's bring in Rick Reider. He is BlackRock's CIO of Global Fixed Income. He's back here at Post 9. It's great to have you, obviously.
Thanks for having me.
Always, but certainly as this news was breaking and we knew we had an interview scheduled with you, we were looking very much forward to this. You heard what Richard Fisher had to say, that this action in and of itself undermines everybody who was on that wall that we showed, including you. Do you feel that way?
So, he said a couple of things I also agree with. First of all, the Fed's going to, whoever the chair is, whoever the committee is, they're going to make the determination on the data. So whether whoever gets appointed in that chair role, listen, you have to make, listen, I believe this, and I think there's a power of that institution that you are going to do what is right for the country. And so do I think, listen, I think there's a lot of drama. There's a lot of discussion about it. I think at the end of the day, whoever's in that seat, not just that seat, the whole committee, they're going to look at the data, evaluate the data, and make whatever the right decision is. So I think there's a little extra drama to something that, listen, I've sat on the Fed's advisory committee for a number of years, the Treasury Borrowing Committee. That institution has incredible integrity. We could, I'm not going to get into what happened here, but that institution is very sincere in terms of what their mission is.
Would you be comfortable being the Fed chair in light of this development, knowing what is always sort of hanging over your shoulder?
So I'm not going to comment on that. Would I? Listen, I'm going to just say it again. I think that anybody who's in that seat, that is an independent seat. That is a seat that you report to, I would argue, to your constituents, which is the country. And so I wouldn't comment. Whoever is in the role is going to make the right decisions. It's going to make the decisions that is the right thing for maximum employment and price stability.
Is that the message that you're going to deliver face-to-face to the president when you meet later this week?
So another thing that I'm not going to comment on, but I would, listen, I think there's some things that the Fed can do, and I think there's some initiatives. I've been pretty vocal for many, many months. I think the Fed's got to get the rate down. By the way, I don't think it has to go down that far, but I think the Fed's got to get the rate down to 3%. I think that's closer to equilibrium in a labor problem. In a situation today, we have what is potentially a labor problem. So I would certainly convey what I think today. You got to get the rate to 3. I think you've got, and then you got to look at where we are. And so anyway, if asked, that's what I would talk about.
Let's try for the moment to take yourself out of it. I understand how difficult it is for you to address it. Not even I'm going to ask you the questions anyway.
Yeah.
But do you worry about Fed independence if you're not even in this conversation, given these events and others along the way?
I don't. At the end of the day, like I say, because I've been around that institution for so many years, I know what the culture is. I know how they make decisions. That no, I'm not. I would say, as somebody who does an awful lot in the interest rate market, does a lot in the equity markets, am I concerned about we've got a committee and we've got a group of people that are going to just move with whatever the fiscal initiative is? I think there are some things, though, that whoever is setting policy and whoever sits on that committee that you have to think about going forward. One is the debt in the country is significant. I think part of why I think the motivation is you've got to move the rate to a level that is, and allow the economy to, quite frankly, to breathe, because we got to de-lever what is, and I would argue today, an over-levered government.
Just to make sure we get this fully on the record before I ask you about the markets, is it true that you're interviewing this week, this Thursday, with the president?
I would go right to the market. So I can't.
You won't even comment on that?
So no. All I will say is I've seen a bunch of the stories that have been out today, in the press stories that are out today. They seem reasonably accurate.
Okay, fair enough. Janet Yellen today said, aside from she finds it extremely chilling for Fed independence, as I said with Richard Fisher, that she was surprised the markets aren't reacting more. Are you?
I'll just tell you the way we invest. At the end of the day, I've got to make decisions. So including overnight when the markets were reacting in a pretty extreme way, I look at where the economy is. The economy is operating at a really good level. I look at where the technicals in the equity market, the rates market. So I quite frankly, much of what has been a successful trading strategy, investing strategy for the last couple of years is markets tend to overreact to a lot of data, and then we get data to the contrary or different data the next day. So one of the most successful strategies has been when markets tend to overreact, be on the other side of that.